Switch gears. Alan Nuttman is the Chief Market Strategist at Agora Financial. Alan, you're looking at banks which are doing well today. We've got the rare simultaneous value and momentum rally today. Small cap and big, everything's working.
And this is what you want to see. Nothing's changed in the big picture. Optimism wins. The market's had a profit-taking pullback, but you're seeing people jump back in and looking at this as a new opportunity. I love the banks. Let's remember how much money they made in their earnings last quarter, even when everybody else, had all that evaporate. So it's very important. We've got earnings coming up here in the next coming months. And the PE ratios, if you look at some of the big boys, JP Morgan, Goldman Sachs, Citibank, Bank of America, they're all sitting right around the 10 level. So I think there's a lot of value here. Okay,
so Alan, when you look at value, how do you define that? Just based on the chart where banks have traded before, or are you saying that they're cheap next to earnings? What do you mean by value?
Yeah, the banks never fully recovered from the financial crisis as far as a group goes. And if you look at this pattern that we see in this recent bounce, you're still seeing XLF, the financial ETF, still 20% off in 2020 compared that to the S&P, up 5%. And so I think if you look at this chart pattern, there's this large wedge roughly between 18 and 26, puts in a midpoint at 22. I'm looking at the 22 calls for November. Now, November is only $25 more expensive than the October place. So it's my same old stock substitution. Being long from 22, if we're at 25 right now, the market, those options are $3 in the money. They're trading for $3.50. So your break even is about 50 cents higher with 2 months at time for good things to happen, and 80 delta. So everything benefits here. And the projected upside target on this wedge is sitting at about 32.50.
All right, so 32.50 for XLF. There's always buyer's remorse, it seems, Alan, when people try to bet on the banks. And at 25 right now, that looks like kind of a far ways away. I mean, you got to get above the June high when all the reopening trades were cranking right before the second flare-up of COVID. I mean, those are the good times for banks in the recovery. That's still $5 below the strike.
It's bad enough to buy. Nobody believes in the banks. The banks, let's remember how much the profit these guys spit out every single quarter. Bad times, good times, these guys are just cranking out the cash. So at some point, people are going to realize there's value here. And again, from a risk-reward standpoint, I only need a modest move. I don't need it to get to 32.50. I just need a modest move of a couple dollars. You're buying options for 3.50, so I just need a couple dollar move, and that's very reasonable. And those options will gain 50% or 100%. So it's as much as a strategy, but it's also a very conservative play. I'm not chasing, the MU. I'm not going after the AMD at these levels. I'm looking at being a little bit more conservative with something that hasn't moved yet. And nobody likes the banks. So when the money flow does move in here, you're going to see a nice little bank pop.
Okay. Alan, before we let you go, it sounds like you are definitely in the bullish buy the dip. It's just a healthy correction camp.
Yeah. I don't, I'm not smart enough to pick, when this is actually over. So I'm just going with the flow. And we've seen this time and time again. Let's look at one important indicator. We don't talk about it enough is the VIX. The VIX rallied to 40. So the midpoint of that 20 to 40 is 30. We've been solidly below that. We were at 26 today. So even though it may feel like people have extra concerns, it's really not reflected in the measure of the VIX. We didn't see bonds rally. We didn't see gold rally. We didn't see, currencies have the flight to quality move when we saw that profit-taking pullback, which was much needed. We're still up 50% plus in the S&P off that bottom.
All right, Alan Nuttman, thank you, sir. Riding the wave, going with the flow, dude. I like it, Alan. Chill take this morning, Mr. K. Thank you. Alan's the Chief Market Strategist at Agora Financial, making the case for buying financials. We'll hear a little bit of the same when we return with our small cap value guest, Eric Kuby.